All right, everyone, welcome back for another episode of Carnivore Trades. Today is Friday, April 29th, 2022. If you're not done so already, please like, comment, subscribe to the channel if you like the content. If you're interested in swing trading, alerts, and analysis, come find me on carnivoretrades.com. This is a tough market to trade right now. We could all use a little bit of guidance, and we are beating the market very nicely this year. So if you're interested in that, come find me there. Anyways, we've got a nice reversal on our hands here again. Market's giving back really all of yesterday's gains for the most part here. Take a look at Apple. There's the spiders now dipping below the low of the week, and we're basically testing that 20-month moving average here. You can see right there, we're basically testing that. We'll see if they bounce us off that into the close here. So no window dressing going on. Usually last of the month. Sometimes you get window dressing. However, first of the month, which will be Monday, a lot of the time you get those first of the month money flow. But, you know, depending on how they push us into the close here, maybe they gap us down. I know the last couple of days we've been talking about, you know, possibly they gap us down Monday, you know, they push us down to the close here and then gap us down Monday to basically capitulate the last week hands. And then we really have the same setup here as last month. So just lots of selling going on ahead of the FOMC. Remember, we had this dump here, and then we had a nice rally, and then FOMC day, we just squeezed up. So again, market's a little oversold here going into FOMC, into that 20-month moving average, and just really bearish sentiment across the board. So we'll see if we get that same setup. But here, look at Apple. So obviously reporting earnings popped up to 167, 168 after hours. And I said if it can hold 165, it did get up to 165 again in the morning, first thing in the morning, 166 to be exact. Then rolled over, went right into that 50-20 moving average area, this red bar, and reversed pretty sharply. Looks like that is flirting with the 200 moving average currently. Obviously, Amazon getting absolutely roasted today, 24.48 currently, after a close just above 2,900 yesterday. Now, Amazon will be a $2,000 stock very soon. So I said this months ago, if you close below this green bar here on a monthly basis, it's going to $2,000. And you know what? Honestly, it's not even that far away right now. So it's not even really going out on a limb that much anymore. But that green bar low is now compromised. It is very oversold short term. You're into that 50-month moving average. That should be good support. This green bar here, breakout bar, little consolidation month. So it should get some type of a bounce here. You know, maybe next week, especially if we do get some type of oversold rally into FOMC or after FOMC. But Amazon getting absolutely crushed here on earnings overall, so we got to be careful in this market. Anyways, let's flip over here. Let's look at the Dow. So Dow holding up the best out of all four major indices, only down 2.29% here. Hasn't taken out this pivot low from the week yet, but it is flirting with that level. Again, that 331 area has been such a good level for pivots here this past year. But Dow getting hit just like everything else, but it is the strongest of the four indices. Speaking of Dow stocks, take a look at Verizon here. This has been absolutely blasted over the last week here, now at 46. This is getting kind of interesting to me, though. If we zoom out onto a monthly, I think it'd be pretty attractive around 45 bucks. Now that 200-month moving average, I have to do some work on this, but it looks like there's a lot of support in that area. So that one is very interesting to me. This one has absolutely been a complete exodus over the last week or so on VZ. As far as the triple Qs are concerned, still managing to hold that pivot for now. So we'll see what we get tomorrow. Monday rather. IWM still inside of yesterday's tail candle, but it is going to close below that weekly inside bar low. So that is basically now compromised. Again, the Russell's been weak for a while. I think it's basically just a matter of time before you head back to 170. But again, stocks are very oversold near term, so nothing to say it can't bounce. But obviously, the Russell has been a weak name so far. All right, flipping back over to tech. So semiconductors, we've been talking about this wedge pattern here. Again, this is one of the reasons why I think we could have a good, another good short squeeze here coming up soon, especially into the FOMC. Remember the falling wedge we were covering a month ago? That played out really nicely, and we had a couple of divergent lows there. And you know, maybe we need to make one more divergent low, maybe a gap down Monday to flush everybody out, take you back down to this trend line, and then you could have, you know, some type of a rally there. So those falling wedges have worked out nicely. And I expect this to play out here on the semis as well. So that would obviously give tech a lift overall, as the semis are a very important industry group and they make up a lot of technology. IGV, same kind of deal. make up a lot of technology here, but no falling wedge per se. They had one last month, just like the semis did. Does not have one now, but again, doesn't mean it can't make another divergent low here if everything else gaps down. But IGV is actually holding up okay, believe it or not. Today, relatively speaking, still hasn't taken out yesterday's low and still hasn't taken out the low of the week. So IGV is, give it a little bit of credit. It's holding up okay, all things considered. Same thing with the Dow Transports. This is a bit of a stronger industry group right now that has been holding up okay. It has reversed all of yesterday's gains, but it's still way off the lows of the week and way off the lows of the month. So it's performed better. By the way, speaking of monthly lows, I just read S&P has had its worst April since 2002. And, I've been saying on the channel, typically April's a bullish month. We were looking for something more of, a move up here and a move back and then another move up. And then we were expecting this type of selling in May. Obviously, that hasn't been the case. There's still a good chance we can get a rally here. But, man, a very, very, very piss poor April for the markets overall. Anyways, TNX, so 10-year reversing pretty sharply. Again, I think this is starting to top out here. 30-year, same kind of deal here. Didn't make a new high. Take a look at TLT intraday. There we go. So intraday, gap down and then big surge off the lows and now just consolidating here in the upper range of this green bar. So it does look like there is some accumulation going on in bonds. That doesn't mean that we can't have some type of a blow-off move for the FOMC. Again, there's 50 basis points are priced into the market. So we'll see what we get. Assuming the Fed doesn't do anything different, I would assume that basically that's all priced in. So again, a lot of the time you get a knee-jerk blow-off move in this situation, but look how overbought yields are. And again, I've been saying I think they do need to test that 3% area or at least pierce it, basically to increase the FOMO, essentially. Anyways, high yield debt. This should get down to that 78 handle. So this has been very weak. This is losing all support for the most part. Thought it had a chance to hang on to this green bar low last week. That didn't happen. So next area is going to be about 78 bucks. It should get some type of a near-term bounce there, but overall not a good look at all for the HYG. Home builders actually holding up okay. Surprisingly, it's been a weak industry group. Here's CITB. Still down on the day, down 2.5% here, but still well off the lows. And obviously, this is a bearish pattern. I still think that they can get some type of a bid here over the coming weeks. But overall, I think this sector is a sell, all things considered. Same thing with VNQ. That looks like a failed breakout. We talked about this last couple of days. Got a nice bid yesterday. It needed to, and now it's going to lose all 4 major moving averages. So that looks like a fake breakout there on the VNQ. As far as XLF is concerned, financials here. So again, you kind of make a case. A lot of these charts have the same kind of downsloping, kind of divergent low pattern here. So we'll keep an eye on that. Again, if we gap down, 34 would be support. I think if we pull back, there's a level here. Yeah, so right in this area here, there's a lot of chop in this range. So that could be support here. It is, again, very oversold. Fins are. So we'll continue to monitor that, but it's going to perform with the rest of the market. If yields top out, that's not necessarily good for financials, though, as well. So keep that in mind. And XBD, we've been talking about this 400 level. Again, another kind of falling wedge pattern here. But again, it could make one more divergent low here. And I think then it's probably due for some type of oversold rally. All right, so energy here. So crude tried to break through this sort of trend line area. It depends on where you want to draw it, really. There's 2 real lines. So you can make a case that this is a line and that was rejected there. And then I think the one I had on before was something like, maybe it wasn't even there. I'm not really sure. But in any case, it tried to push up, tried to make a higher high, and it did get rejected. It's coming off of this trend line here. We'll see again, if it makes another equal low, you got to think with lower highs that it's going to want to go down and test 85. I've been telling you guys that for weeks. But again, crude has been pretty range bound here, so it's likely going to take a catalyst to move crude oil here. Anyways, XLE coming back in a little bit, just like a lot of the stocks in the market here. Chevron did report today, so that is coming off the highs, as is Exxon. So it appears that there is some supply up here. And again, I've been saying this for really months now, but these stocks are just so high on the hog and really making divergent highs is the XLE, and Chevron by extension. But, look at this channel. I mean, just such a steep divergent divergent line, the XOP, rising wedge pattern breaking down, now consolidating there. XO or OIH, same kind of deal, consolidating beneath that 50 moving average. So I think these are in corrective mode now. Doesn't mean they can't hold up a little bit, especially if the market does get a bid. But overall, I think that the energy stocks are in correction mode. And nat gas, really not a whole lot to say. Got that pop move, sold off yesterday, and now kind of getting a rebound here. So we'll see what kind of pattern it puts in, but overall, nothing too new to report there. Dollar index did pull off of that double top area. So we showed you this yesterday. So double top, really kind of you could make a case it's a triple top, but pulled back off of that. So we'll have to see follow through. But the dollar's been strong here, and when you have a trend that's this strong, nothing to say it can't go higher, but you have to see some type of follow through. And again, it is overbought, but we have to see follow through here on the downside. All right, dollar index, obviously weakness helping gold out a little bit. So it went down to that 1870 level and getting a nice bid off that. Now kind of getting rejected at this trend line. Again, we'll have to see what kind of pattern we get out here. This was a pretty monumental fall on GDX and kind of a weak bounce. Overall, I think this probably wants to go down and test 32 at some point. Maybe not, in the near term, but at some point soon. Silver is continuing to get hit here, but it is very oversold. I do see some support right around 22.75, 22.50, somewhere in that area. But it is very oversold, so we'll continue to look for that, see if it gets a bounce there. And SILJ, maybe it got that bounce off of $12, but maybe it goes down to that 11.50, 11.75 area after all, like I was talking about on Wednesday. Platinum, a little bit of a bid here, but nothing significant. Palladium, same kind of deal. And copper, to me, looks like it's in a weak technical position. So move down here, and now just chopping. There we go, chopping right below that 200 moving average. So a little bit more consolidation here could put in a bear base. So be careful with copper at the moment. I do not like the position it is in. Also, flipping over to the coins here. So it looks like this inside bar is still intact here on Bitcoin. So we could see some continuation. Moving averages are starting to slope down. So it's going to be kind of do or die time pretty soon here for the coins. Same thing on Ether, kind of little inside bar, up 1, 2, up, and now down. But we'll see. Maybe it can hold this trend line again. The FOMC is going to really change everything. I don't really have anything too new to report here on the coins at the moment. But again, it's all going to be down to the Fed, especially if we're really oversold going into it. And they don't say anything crazy. You got to think a lot of this is probably priced in. And remember, Jerome Powell's tone will change everything. He could say, the statement could be very negative, but when he gets on the microphone, he can change that with his voice. It's really all about his voice. I think his FOMC statements, personally, he's usually a little bit more dovish in the statements, and he's a lot more hawkish in interviews. For instance, the interview he did earlier this month, it really kind of pushed the market lower. That was more of a public forum. When he's doing his FOMC statements, he seems more comfortable and kind of in control. So anyways, we'll see what we get out here. You guys have a good weekend. I'll talk to you next week. Come find me on carnivoretrades.com. All right, guys, take care.